Hi, I'm Andreas and welcome to this week's video insight. Today I want to talk about the impact of different management philosophy trends and practices. The management of businesses often touts various management concepts when they try to take the business through a restructuring and either take credit for improved results or blame previous management for bad results. As an outside observer, I've always thought it very hard to judge how much impact a particular management philosophy has, as, firstly, no two businesses are exactly the same, and secondly, the environment that the reorganization is implemented in has probably far more impact on the results than a specific type of management philosophy. I've therefore most often taken with a very big grain of salt the claims by management of the effects of implementation of a certain management philosophy. Sometimes I do think that there are some things that are worth looking closer at, since the published results kind of speak for themselves. One such example is the recent implementation of Agile at Spark New Zealand, which is one of the biggest positions in the Montgomery fund. Agile is basically a structured way of organizing your workforce into independent teams that are responsible for the whole delivery of a product, rather than the traditional way of having more or less independent functional silos. The difference can be illustrated by the following slides. On the first, we see a traditional top-down organization with top management on top, followed by a bureaucracy of middle management whose task it is to implement the strategies that come down from the top by using the resources of functional departments like planning, production, and sales and marketing, etc. This can be contrasted with the second slide, which shows the Agile model that Spark adopted with a number of cross-functional teams consisting of people with complementary skills working together and being fully responsible for the whole life cycle of their part of the overall business. Some of the benefits quoted from the new ways of working are: firstly, much faster product launch cycles, as planning, production and marketing, etc. is done within one team instead of having to be coordinated between different silos. Secondly, greatly reduced number of management layers, from 5 or 6 to 3 layers, leading to significant cost savings. And thirdly, increased customer service, as the teams are able to respond to customer needs and implement changes much quicker than before. It is of course very easy to look at these pictures and say that yes, this makes a lot of sense, but how do you know that it's actually working? As Spark is a listed company which regularly reports its financial results to the market and are now mostly finished with the Agile implementation, we can see at least some financial results. The most obvious is the reduction in headcount and labor costs, which you can see on this slide, which shows that the total number of employees in the first 1.5 years reduced by 7.4%, while the analyzed net labor costs fell by much more, by just over 19%, showing that it's really the reduction in higher paid middle managers that is contributing. As a result of the falling labor costs, Spark's EBITDA margin has increased by around 1 percentage point and increased EBITDA by around 3% by itself, which is quite a bit for a stable company like Spark. The early indications are that the other benefits from the Agile way of working, like shorter product development cycles and increased customer satisfaction, are also coming through. But as these are harder to quantify, we will have to wait and see if this translates into further improved financial results. Overall, I'm quite impressed by the results that Spark has achieved and will certainly listen with interest to any other management teams that proposes to change the way their organization is working to Agile. Thanks for watching, and don't forget to follow us on Facebook and Twitter.